All right, Traders Greg here with a market update. Okay, so there's a few interesting things happening in the market at the moment, a couple of markets that are trending exceptionally well. The first market that's trending the best and the most focus is obviously Bitcoin and crypto. Bitcoin in the last couple of weeks has gone up almost 30% in a straight line and has been smashing through the topside targets of 80,000, and now we are at 100,000. With the high recently being 99,500. But look, I would suggest that we are coming into finally some stiff, strong resistance on Bitcoin at 100,000. And that's for a couple of reasons. The first one is that it is a big psychological level. And also the fact is that some the Bitcoin whales are sitting on some phenomenal profits up here at 100,000. So you can imagine that some of these Bitcoin whales will be taking some money off the table, and that's why we're seeing some decent sell orders in front of 100,000. So I'd suggest I would not be chasing Bitcoin fresh long at these sort of levels. Look, for it to go through 100,000, I think that we're going to need a decent rally in risk, and especially equity indexes, S&P and NASDAQ, to pop higher from these sort of levels, to assist Bitcoin, if it was to make further, decent gains above 100,000. Look, the Bitcoin bulls are eyeing now 120,000 as their next topside target. But again, I'd be surprised if we get up to those sort of levels, especially in the short term. Any sort of further gains from 100,000, I think, are going to be very hard-fought gains. Okay, so another market that has been doing exceptionally well in the last week has been gold. Gold opened on the extreme low last week, closed on the extreme high, and was up $150, back above 2,700, and it looks like it wants to start retrending again. The big reason for that, and the obvious reason for that, is the geopolitical concerns. Especially what's happening in Russia and Ukraine. We haven't seen risks heighten as much as what we're seeing at the moment, with Ukraine sending long-range missiles into Russia, and Russia also testing some new weaponry out on Ukraine. So gold is benefiting once again from safe haven buying. There is even headlines and talk that Iran is preparing to attack Israel again. So look, you don't want to be selling gold. Gold certainly is a buy again while this is happening. Look, you do get good daily ranges on gold, so I'd suggest buying gold on dips is probably the preferred strategy there. Okay, the other market that is doing exceptionally well is the currency market, and especially the US dollar. The US dollar in the last couple of months has been on fire. The dollar index has traded from the lows of 100 all the way back up now to make highs last week above 108, which is multi-year range highs. I'd suggest that breaking those multi-year range highs is definitely bullish, and no doubt we can see momentum higher over the short and medium term for the US dollar. And levels above 110 on the dollar index certainly look realistic. So look, I would not be selling the US dollar anytime soon. On Friday, we did have some very important manufacturing PMI data, both out of Europe and also out of the US. In Europe, the manufacturing data came out well below expectations and was abysmal, especially in countries like Germany. It actually looks like it's almost recessionary sort of levels. In the US, we actually had the PMI manufacturing data come above expectations. So at the moment, you've got a tale of two worlds. One in Europe, we're looking like now, we're seeing lower growth, and there's serious concerns there. And there's even calls for the ECB now cutting rates by 50 basis points at its next meeting. Whereas at the US, we're still seeing a solid economy, and we're seeing growth, and we're seeing a Fed that potentially might even be pausing soon. So the euro, we saw that actually go down into the low 104s, 2-year lows there, and there's actually calls now for the euro to drop down towards parity and maybe even breaking parity. So look, I wouldn't be running out buying the dip in euro, because the fundamentals, and especially with an ECB cutting by 50 basis points and potentially the Fed on pause soon, that euro certainly has a strong case to continue to go lower. So yes, selling euro on rallies is definitely is probably the favoured strategy at the moment. Okay, so this week we have a shortened week. It's Thanksgiving in the US, and most of the traders even take on Thursday, and so holiday there, and most traders even take the Friday off as well. So at the end of the week, we'll probably see trading, the markets going quiet. But before that, Wednesday, we actually have a big day. Wednesday, we have an RBNZ rate meeting. The market's expected potentially even a 50 basis points cut by the Reserve Bank of New Zealand. We also have Aussie CPI on Wednesday, and we also have in the US some very important data, US PCE inflation data, which is the Fed's preferred inflation data. So a lot happening on Wednesday before we go quiet for the rest of the week. I hope you have a great start to the week trading, and we'll talk to you, check back in soon.